So, good evening traders and welcome back to the channel. Today I'm going to cover 5 things you need to do before entering your next trade. These are things that I do before entering a trade and things that I feel like will gradually help improve your trading as a whole. It's not going to suddenly make you more profit. It's not going to suddenly increase your win rate by 100%, but I do think long term, getting into a routine of doing these 5 things will definitely help your results and make you win more and lose less with silly mistakes. So we're going to start with one that's very simple, and this is to calculate your risk properly according to your plan. You're probably thinking I'm just going to say calculate 1% risk and then enter the trade. No, because I feel like many people watching this video go into a trade thinking it's going to win or thinking it's not going to win, and they adjust their risk according to their emotions during that time. So if your plan says this is an A+ setup, I can risk 1.5%, perfect, risk 1.5%. Whereas if your plan doesn't have that, every setup is kind of equally graded in your mind and in your plan, then you go in and say, I think this trade is going to win, so I'm going to risk more, but your plan doesn't say that, do not do it. And also it goes the other way too. Don't go into a trade and want to risk 0.5% instead of 1% because the trade doesn't look good. You don't think it's going to win, so you're going to lower your risk just in case. Again, if this is not part of your plan, just simply don't do it. Use the exact same risk on every single trade unless you have something that says that you can change your risk. For the majority of traders watching this video, fixed risk is most likely the best way for you to go about your trading. It stops confusion, it stops you trading, increasing or reducing risk with your emotions, which a lot of you probably do. I was definitely guilty of that in the first few months of my trading journey. It was very brutal, and I would never wish that on anybody else, especially you guys watching this video. Make sure anything you do is according to your plan. And if it's not, then expect the results to be completely different from the results you have tested on previous data. So if you guys are looking to learn how I trade and how all these people are getting thousands and thousands of dollars in payouts from my strategy, be sure to check out my mentorship. There is a link in the description. The members are absolutely killing it. They're doing amazingly, and hopefully you guys can do the exact same, replicate those results if you do sign up and join the mentorship. So moving on to point number 2, and this one is very simple again. I like to keep it simple on the channel and in my trading, but you need to check news. You need to check any possible announcement, speech that could affect your trades. One easy thing to do is to just have in your plan a checklist, a filter that says check news. If there is high impact news, don't enter the trade. Obviously, if the high impact news is 5 hours down the line, you can enter the trade, but maybe set an alarm or set an alert at that time so that you don't hold the trade through the news. And I'm saying this for your guys' sake. I've been in some terrible situations, especially trading with prop firms, with the slippage. Slippage is never good with news. Prop firms also have restrictions on news trading, usually around closing or opening positions 2 minutes before or after the news event. So if that trade even hits your take profit with the news, it might seem like a really good scenario, but again, that can be a hard breach for the majority of prop firms that you will actually use. So it's best to prepare for the worst and don't hold through news. Don't enter right before news, because the likelihood of that actually winning and being on your side is very slim. It can be on your side, but like I said, even if you win, it can go against you. So just get up a calendar that has all the news for all the forex pairs you are trading, and maybe filter it to high impact, because obviously those are the ones that usually affect the markets and increase the volatility. So check the news, check that it affects your currency pair, set an alert or an alarm so you don't miss it, and close before the news. If you're trading on the higher time frames like the 4 hour, the daily, this doesn't really matter as much, but you still might want to close before the news just in case. If price is obviously near your stop loss or near your entry, it can be quite difficult. But if you've tested trading through the news, like on a higher time frame, as I mentioned, then this can be completely fine. But the majority of people watching this video, they're likely to be trading on the lower time frames, so that is one for you guys. Number 3, one that I preach about quite a lot, and this is to check your checklist. And by check your checklist, I basically mean have a checklist that says, this is what I need to do first, second, third, fourth, fifth. However many different things you need to get into a trade, do that. And if not all of those are ticked, do not enter the trade. You can have different scenarios with your setups. A lot of people do like a grading system. So if 5 out of 5 confidences are met, then it's an A+ setup, and they can increase their risk by 0.5% because they know that has a higher chance of winning. You also have an A setup, a B setup. Some might even have a C setup too. But obviously, you don't want to reduce your risk too much because, you know, if your strategy wasn't good enough to risk a normal 1%, then it probably isn't really worth taking, in my opinion. So on this checklist, you could have your entry criteria. So if this happens, enter the trade. Maybe you have another confluence. If this happens as well as this, it boosts it up to an A+. But as long as it's in a checklist that you can easily see tick, 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 and enter the trade. What I also like to do is have a flow chart. So it basically tells me every single scenario. So if there is a break of structure, yes. Then it tells me what to do after a break of structure. If there's no, will there be a break of structure? Or is there likely to be a break of structure? If yes, set an alert at that level. Just as simple things. So I'm basically covered in every single scenario. And if you're testing and all your results that have built your plan is based on that checklist or based on that flow diagram or flow chart, then you know exactly what to do in every single scenario when you are trying to trade the live markets. And if you have everything that's set out simple for you to read and tick, you can't really make any mistakes. And if that wins, perfect. If it loses, it doesn't matter. As long as you did everything correctly, that's all you can do as a trader. And number 4, this is more of the journaling side of it. And this is to note your emotions down before entering the trade. The reason this is very, very important is a lot of traders have a good plan, they have a good strategy, but they still end up losing money. They still end up blowing challenges or even blowing their main account. The reason behind this is that they're going into trades, not trading based on the technicals, but they're trading based on their emotions. Majority of traders are doing a lot of emotional mistakes. People call them psychological mistakes. It could be both. Majority of people are over trading. They're entering trades when they shouldn't be trading. And again, if you have a good plan, you should be following it. You know, that's kind of the simple way to look at it, but it is not obviously not that simple when you are actually trading. So if you have a section in your journal that has obviously your technicals and you can note down exactly what you're seeing in the markets, candlestick wise, then you can also have a emotion or psychology section and just basically note down what you're seeing and what you're noticing, you're feeling when you are entering that trade. It might sound quite silly to some people that don't suffer from emotional mistakes in their trading, but let's say you are scrolling through Instagram or Twitter and you're seeing other traders in the markets making profits, and then you go and enter a trade. If you notice this, you can set a limit on your screen time during certain hours or a certain cap of minutes per day on that app. And what this will do is it will avoid you seeing other people making money. It avoids you getting FOMO, fear of missing out, so then you don't force yourself into trade. A very, very simple fix to a solution that can be caused so easily by social media. And number 5, again, probably the most overlooked way of learning in your trading to actually take good setups and to fully understand your strategy. And this is to record yourself explaining your trade for 2 to 3 minutes before entering. The reason this is amazing is because if you cannot press record and speak about your trade, why you're entering it, what you're expecting price to do, how you think price is going to react at a certain level, how you're going to manage each kind of level that price can get to. If you can't do that for 2 or 3 minutes, then you don't really understand your strategy and you shouldn't be in that trade. If you have backtested and created a plan, it's profitable and everything, you should be able to explain for 2 minutes or 3 minutes, depending on how complex your strategy is, how and why you're going to get into this trade. Every single scenario you need to have covered. And if you can't explain this, just talking to yourself, you don't have to post it anywhere. You can just keep them in a folder, dated with obviously the date and maybe the outcome of the trade afterwards. But it is just a great kind of thing to do. And it only takes 2 or 3 minutes per day or per trading day even. So if you do it, try it and let me know how it goes for you. It will also make it easier for you to actually see your setups, because if you can't talk through it and actually notice it in real time, then you don't really understand it. And that's kind of the way I see it. So if you use any of these 5, be sure to let me know and I'll catch you guys next time.